spread between the US 10-year and the Indian 10-year seems to be at all-time low. And how do you see this trend emerging going forward?
Good, very good question. So the key point is this. If you look in terms of Indian corporates, the interest rate you're getting for the same corporate, for the same tenor, outside India is higher than on India. Let's take the example, where, for example, look in terms of Tata Motors or JSW Steel or Shriram, or what you like to look at it. So if you look at 3-year paper in India in INR terms, look at 3-year paper ex-India in US dollar term. The same issuer, you will see the interest rates are marginally better ex-India. And let me tell you, this I'm talking in US dollar terms. And if you add the rupee depreciation by about 2 to 3%, it becomes fabulously good.
And is this something that is going to last too long, or these are extraordinary times?
These are extraordinary times. I don't think it's going to last long. So let's go back. Why has it happened?
Yes.
Last year was very interesting year. We saw almost 20-fold increase in the interest rate.
Yeah.
This is the fastest, highest, interest rates the humanity has ever seen. So what the impact of it was that when the interest rate go up, the bond price come down.
Yes.
Let's example. If a bond is giving you 4% per annum of a 1-year bond,
Yeah.
and the interest rate becomes 6%, nobody is going to buy the 4-year bond, 4% bond. Correct? So what will happen is the bond will quote at 98 cents to a dollar. So that when you buy the bond for 98, on maturity you get $100.
Yeah.
So make $2 in terms of capital gains, and of course $4 in terms of coupon.
Yeah.
So takeaway to you is, when the interest rate go up, the bond prices come down.
Yeah.
That's exactly what happened in 2022.
Sure.
So either we can crib about the bonds coming down in 2022, or we can rejoice the fact that today we are getting fantastic returns. As I mentioned, this is the highest return which we got in last 20 plus years. So the returns which you're getting is far higher than you should get it across out there. This is indeed an aberration, and it's a question of few quarters when it'll come down back to the old levels.
Sure.
Remember, the interest rate in India typically should be higher than in US.
Yes.
And the reason is very straightforward, which is because on a long-term basis, India's growth is a higher rate growth with a higher inflation in India, therefore higher interest rate in India. But today is a unique opportunity where you can get much higher return investing into ex-India.
Sure. And do you think this is the peak, or should one look at timing the market to the perfection and wait for a little longer?
See, in the fixed income space, you make money if you don't lose money. Right? So in equity, if you hold, you have to pay holding charges, right?
Yes.
In good old days, it's called batla, and whatever you call it. In case of fixed income space, you're getting coupon. So you're actually paid to hold.
Yes.
So the timing in the market becomes much more important than timing the market.
Yes.
Now comes the other technical portion. The bond yields typically peak 6 months before the last Fed rate hike.
Sure.
Right?
Yes.
So the point is this, today is the best time because we know we are already at the peak, or you may have a 0.25% more, which doesn't matter much. Because look, if you are going to put money into the bonds, your returns are fixed.
Yes.
It doesn't matter thereafter whether the interest rate go up or come down.
Yes. So given this, we have also seen one of the new trend that is emerging, which is HNIs and family offices looking for investment solutions beyond India. What has been your observation, Sanjay?
Oh, it's absolutely amazing, absolutely amazing. We are seeing that the amount which is being invested out of India is growing by almost 68% CAGR, which is crazy.
Absolutely.
Right? We're talking almost $2 billion being sent through LRS route. And even if I look into only the money which is being put into equities, bonds, and deposits,
Yes.
in the first quarter of this year, without taking the growth rate,
Yes.
we're talking an annualized amount of 31,000 crore rupees. 31,000 crore rupees, that is what people are expected to send from India in the current fiscal year without taking into consideration the traditional growth rates.